the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through the closing numbers as well as some of the biggest movers, sectors and companies to watch. But as always, a quick recap of some key movements. While Singapore shares moved higher today, even as traders continue to mull news surrounding global trade. So the Straits Times Index was up 0.42% at 4,092 points at about 2:38 p.m. Singapore time, and that is with a value turnover of some 878 million Sing dollars seen in the broader market. Now let's take you through how the Singapore stock market fared today. The STI closed up 0.3% at 4,087 points. In terms of value turnover, that's 1.35 billion Sing dollars. Gainers outnumbered losers 298 versus 202. Top advances for today, let's take you through them. We've got for you Fuji Offset, Neo, as well as DBS. And top decliners, we have here Jardine, Psycho and Carriage, GMHUSD and Holpa. Now, in terms of counters to watch, we have Singtel, because Singtel's technology services arm, SIAS, will invest 130 million Sing dollars over the next 3 years to further its AI development across Asia Pacific. Now, elsewhere from the S&P 500 and the Nasdaq hitting fresh peaks despite Trump's latest tariff threats to academics, including an advisor to the People's Bank of China, urging the country to add as much as 1.5 trillion yuan in fresh stimulus to boost consumer spending and maintain currency flexibility. We've got more international headlines in focus. And joining me on the line today is Benjamin Goh, Head of Research and Investor Education at SIAS. How are you, Ben?
I'm great. How are you?
Good. And we were just talking about some news relating OCBC just now, which we will talk about later. But let's start with the US this time around. The S&P 500 and the Nasdaq, they hit fresh record peaks at the close despite Trump's latest tariff salvo. I mean, we've seen the president dial up the rhetoric by warning Canada of a 35% tax. Most other countries will be handed blanket tariffs of up to 20%, which is up from the current 10%. How far can Trump's words be relied upon, at least in the eyes of market participants?
I think right now the general market perception that it's probably not as bad as it looks, right? So if you look at the data coming in from the equity futures contracts, do not demonstrate any kind of significant decline. So U.S. S&P 500 equity futures down 0.5%. But I think that's kind of the usual profit taking at the end of the trading week. Don't really see it as a start of any kind of significant downtrend. Then also to put things in context, if we recall what happened after the initial tariffs, or rather the tariffs were initially announced after the Liberation Day, most of the tariffs deadlines were postponed, basically to allow the negotiations to conclude. We do have some smaller trade agreements covering specific sectors in place of more longer-term comprehensive trade pacts. So one example would be the U.S. and China trade agreement lifting export ban of rare earth metals to the U.S. In exchange for the U.S. Lifting the export ban on semiconductor design software. So a little bit more targeted. I think in the meanwhile, most markets, they rather have a rather sanguine wait-and-see attitude. It's not the knee-jerk jump off the cliff kind of reaction after Liberation Day, looking at how things turned out. The other upside is, of course, or rather silver lining, right, is that the tariffs have not implemented. So we don't really see a lot of the negative impact showing up in the economic data. So some high-frequency data are showing things like dampening consumer sentiment, expectations are down, so on and so forth. But as you can see, U.S. Unemployment data, hiring data are still relatively strong. Consumption data still okay. So we don't have that showing up yet. So I think the market is basically just, wait and see. Yeah.
Okay. Now, going back to Asia this time around, Ben, how far did Asian markets track advances on Wall Street overnight as well in today's session? I mean, they were mostly positive, but when I checked at the close, they ended rather mixed as well.
Yeah. So you're right. It's the usual mixed bag.
Yeah.
As you mentioned, Singapore is up slightly at 0.29%. Hong Kong is up close to 0.5%. Both Shanghai Composite as well as Japan Nikkei are about flat. So quite surprising was two things. The Thai stock index, the SET index, was up 1.2, 1.3%. So I think something specific happening in the US, or rather in the Thai market. If you move back to the local Singapore market, all three banks, as you had mentioned, ended up green, but not terribly strong performance. I would put it down to the usual random stochastic behavior of financial markets. Offshore and marine were surprising. So you've got two names, Yangtze Shipbuilding and Mermaid Maritime, both up about 1.7, 1.8%. So I think maybe traders are kind of like repositioning their positions. What was really wild was SBS Transit closed 2.47% up. No fundamental news, not sure why. So could have been driven by the prop and day traders. So need to look into that. With regards to regional markets, that was regards to regional markets. If you look at European markets, tracking a little bit lower, German and French markets down about 0.5%, more or less in line with U.S. futures prices. So I think net is not surprising that the STI performance is a little bit cautious heading into the weekend.
Okay, and going back to the Singapore stock market, Ben, how did the STI fare today? And I want to talk specifically about OCBC as well. This piece of news just out at 5:25 p.m., so just a while ago, that OCBC's Group CEO Helen Wong will retire on the 31st of December this year. And Tan Teck Long, the bank's current head of global wholesale banking, is set to take over the top role. Now, just some background information. Helen Wong, she had informed the board last year of her intention to retire for family reasons, and the bank said the board reluctantly accepted her request to spend more time with her family. So I just want to get your initial thoughts on that as well.
Well, I don't think this will signify any kind of significant change in OCBC's business model or their processes or their, KPIs. OCBC has got a very long name, therefore a very deep bench in terms of the C-suite. There's also going to be continuity. So from the news feed, Helen Wong is still going to remain as a chairperson of OCBC China and director of OCBC Hong Kong. Those are major markets. Greater China is a major market for OCBC, so it's good that the current CEO is still going to be, going to be in the picture when it comes to those major markets. So I think the net is that this is going to be one of those steady as she goes kind of things. Not gonna, I don't think this is going to have any kind of material impact on OCBC in the long run.
Okay, and zooming in on some of the companies to watch for today, Ben, we have Singtel, because Singtel's tech services arm, SIAS, will invest 130 million Sing dollars over the next 3 years to further its AI development across APAC. How significant are the news for investors as far as share price movements are concerned?
Well, I think some of the investors really like the information. So Singtel closed up 1.75% today. I think some of the things that came out of the announcement was really interesting. So NCS is going to deepen its partnerships with Google, Amazon Web Services, NVIDIA. Now, all these three names are really the kind of biggest movers and shakers in the AI and data center space. So partnering with them is, of course, great. And the other interesting thing was that the partnership doesn't just cover existing technologies such as generative AI. So generative AI, like ChatGPT, pretty young, 2-3 years old, but is already old news. The new frontier in AI is actually agentic AI. So AI agents, you can think of it as a digital concierge that will do most of your day-to-day stuff. So that is where the new frontier is. There are new products coming out, so it's good to hear that, already in this announcement, I think NCS kind of hit the nail on its head to want to partner with the biggest names on that sector. The investment is over 3 years, quite a relatively long period of time. So I think what the investors want to see is that over this time, there are new revenue and profit streams coming specifically from the new AI investments, specifically from the new partnerships, new platforms, new products, new or rather additional client sign-ups. All in, a good piece of news from NCS. Hopefully, after 3 years, we can see some, real new money coming in.
Okay. And from Singtel, Ben, let's shift our focus to Grand Venture Tech. The precision engineering solutions firm, it is moving to be privatized by Albert's Advanced Mechatronics at 94 Singapore cents a share. Now, the acquirer is a Netherlands incorporated firm, and shareholders of Grand Venture Tech, who collectively hold 64.24%, have given the offerer irrevocable undertakings to vote in favor of the scheme. Now, how would you read into the news? What's next for Grand Venture Tech then?
Well, certainly the knee-jerk reaction from the market when it was, when the news first broke that Grand Venture was in talks with a third party, suddenly has been very positive. So before that, the stock price was about 84 cents. After the street rumors broke, it went all the way to a high of 98 cents. Now, today's price, the stock closed at 92 cents, a little bit below the offer price of 94 cents. Generally, what that means is that, there's a little bit of probability that the buyout may not go through, and hence it's trading a little bit below the offer price. That's the general philosophy. If you look at it in terms of valuation, Grand Venture is currently trading at a PE ratio of 29.2 times, which is much higher than its 5-year historical PE ratio of 23.4 times. So, from that angle, arguably, the stock price is a little bit more expensive compared to its 5 years average. Now, of course, stock price is different from valuation, so we need to wait for the independent financial advisors report to be out. To close off, you look at it from a business model perspective, I think this is a net plus for Grand Venture. Always better to be part of a bigger group. The other thing that's interesting is, of course, Alberts is incorporated in the Netherlands, right smack in the EU. So presumably this will allow Grand Venture, more opportunities to penetrate the EU markets. And once you're in one country, the EU is basically a common market, right? So they can sell products in France, Germany, wherever. So that's all great for them.
And across the region, Ben, Southeast Asia's worst performing tech stock this year. We're talking about Indonesia's Gojek Tokopedia. It is poised to rebound according to analysts. And this, of course, comes as the firm makes strides towards sustained profits, as well as the fact that its fintech business is providing plenty of upside potential. How far do you agree with this?
I think it's a definite maybe. So the company has definitely made a lot of progress, substantial progress in restructuring. Its current business model is much more streamlined. And obviously the objective in the merger between the Gojek and Tokopedia initially was to realize synergies, right? So that didn't happen, or rather the benefits of synergies were not unlocked as much or as quickly as we wanted to. Again, the news feed and the data shows that the digital wallet and lending unit had a 90% year-on-year revenue jump last quarter. But that's only one quarter, right? So what we need to see is actually a more concrete uptrend in the user sign-ups, in the money transactions, in the dollar value of those transactions, so on and so forth. Now, most of these startups, just like Uber, just like Grab, growth in the prior years are mainly driven by offering subsidies to acquire clients, to acquire customers, to gain market share. But that was when the cost of funding was low, when interest rates were low. So now you've got higher interest rates, you've got cost of funding is higher, you've got trade wars, you've got all these risk factors. And therefore, investors are probably going to be focusing a lot more on risk management, on profitability, rather than, gaining market share.
Okay.
So the price has been pushed down quite a fair bit. So yes, maybe it's time for a rebound, and there is a possible upside catalyst if Grab actually pursues a takeover of Go2. So that's more or less event-driven. We don't really know what's happening.
Okay.
But that could be the next leg, yeah.
Okay, and finally, before we let you go, Ben, academics, including an advisor to the People's Bank of China, or PBOC, said the country should add as much as 1.5 trillion yuan, or around 268 billion Sing dollar in fresh stimulus to boost consumer spending and currency flexibility to counter U.S. tariffs drag on growth. How aligned are you with this, and how far are the PBOC's hands tied in this regard if we look at the amount that was doled out previously?
Well, I think philosophically it's a good idea. So pump priming is a very standard, very classic way to counter economic headwinds. But there are challenges, limits to how successful this can be. So if you look at China specifically, China has got a lot of interrelated problems which are happening at the same time. So you've got the property sector. Buyer interest is not where it was. You got unemployment, especially among the young people. Recent university graduates. Employment trends are not where they need to be. Consumer sentiment remains cautious. You also have got a growing trend of homegrown companies investing outside China to penetrate foreign markets and perhaps to dodge the brunt of the U.S. tariffs. So there'll be less investments, relatively speaking, within China itself. And even among the current competitors in China, there is cutthroat competition. So just you look at the current price war among EV manufacturers. So a lot of things happening at the same time. So the stimulus is actually a good idea, but I think in order for it to have a more sustainable impact, it needs to be paired with further structural reforms. That's not something we're actually seeing in a big way from the Chinese regulators or the government right now. So I would say that it's great, but the stimulus is probably not going to move the needle significantly on its own.
Lots to watch indeed. Thanks so much for the insights on a Friday, Ben. That was Benjamin Goh, Head of Research and Investor Education at SIAS. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.